This is Matthew Cratter from Trade University, and today I want to talk about shutting the exits, boiling the frogs, and we're going to be talking about money printing. This video is a follow-up to yesterday's video, which was called Shut the Exits, Turn on the Money Printers. And what we talked about in that video was the fact that these three banks, major banks that service the Bitcoin and crypto industries, had all been closed within a week in the US. Silvergate, Signature Bank, and Silicon Valley Bank. Signature Bank was closed over the weekend, even though it didn't look like it was in any financial danger. So the question was, are the regulators, is the US government attempting to close all the fiat currency exits before the Fed's money printers rev back up? And this morning we're seeing distress in the European banking system as Credit Suisse begins to implode even further, and this is leading to a lowering of the probability that the Fed will even hike 25 basis points next week. And so it really does look like the Fed is essentially done. Now, why would a government want to shut the exits, and what does that even mean? A lot of people are asking in the comment section of yesterday's video. The reason a government might want to shut the fiat currency exits is because if someone can exit a currency as it keeps losing purchasing power, they will do that. And we've seen this happen in Argentina, unfortunately, for many years now. Last year, the inflation rate was close to 100%, and this year it is at 100%. And so if you're earning Argentine pesos, if you live in Argentina, you would probably sell those Argentine pesos and buy US dollars if you could as your store of value. And then you would just convert those US dollars to pesos whenever you need to buy something. And this is not because the US dollar is all that great, but because it maintains purchasing power much, much better than the Argentine peso does. If a lot of people, though, start to sell the peso and buy the US dollars, this weakens the peso and it strengthens the dollar. And so you get sort of a vicious cycle. This exacerbates the problem and makes even more people want to sell Argentine pesos for US dollars. We can see a chart here of the peso versus the dollar, where if the chart's going down, that means the peso is weakening and the dollar strengthening. And this chart is actually much worse than you might imagine. If we scroll out here, we can see how this has really been a one-way trip. And so you're not asking yourself, what's the volatility here? What you're asking yourself is, can I get out of the peso and hold as many dollars as possible? And you don't care that the peso occasionally rallies a little bit against the dollar because you know it's a one-way trip. And so in the same way that people store their value in US dollars in Argentina, I think for Americans and those who use the US dollar, Bitcoin is sort of an equivalent store of value. And this is how you should look at it. This is sort of the inverse of the chart of Bitcoin. And this is one reason that the Argentinian government over the years has tried to ban exiting. This is what we mean by closing the exits or shutting the exits. Argentina bans buying dollars as a way to save because they don't want you to exit their currency. This is an article from July of 2012, and this problem has only gotten worse since then. If you're finding this video helpful so far, I just ask you to hit the subscribe button to subscribe to the channel, hit the like button to help support this channel's mission, and leave a comment or question as well. So why else might a government want to close the Bitcoin and crypto exits before the Fed money printers get turned back on? I think it's because Bitcoin and crypto, to a much lesser extent, are much more difficult to control. Bank accounts can be seized or bailed in. Brokerage accounts can be seized, and it's very difficult to hold bonds or stocks without a brokerage account. I suppose you could still get a paper certificate. Even those can not be honored during emergency crisis times. All the stable coins, really decentralized in name only, USDC, Gemini USDC, Binance USD, these can all be switched off. But do you want to know what they cannot seize or turn off? That is Bitcoin. They can seize it from a few individuals by putting a squirt gun to their heads, coming to their houses, but they can't seize it from 20 million Americans. And for those of you who don't know, the US government unfortunately has a dark history of banning monetary hedges right before they devalue the US dollar. So we've talked a lot on this channel about Executive Order 6102 that President Roosevelt did in 1933. And what this basically did is it ordered all American persons to turn in their gold, apart from a small amount. Maybe you could keep your wedding ring or something like this. And they would buy, the US government would buy the gold from you at a price at the official exchange rate of $20.67 an ounce. And then what did they do? Then they devalued the dollar against gold once they had they had taken everyone's gold. And so at that point, immediately following the passage of the Gold Reserve Act, FDR changed the statutory price of gold, in other words, the exchange rate, the official exchange rate, from just over $20 an ounce to $35 an ounce. So right after you turned over your gold and the U.S. government stuck it in Fort Knox or wherever they put it, if they still even have it, then they immediately devalued the purchasing power of the dollar. So then you needed more dollars to buy the same amount of gold. Here's a picture of Fort Knox. And again, there's a controversy whether the gold's here or not. The U.S. did officially leave the gold standard in 1971. Now, Executive Order 6102 is easy to carry out because most of the gold was already sitting in U.S. bank vaults and people didn't really have a choice. Hence, the importance, the parallel would be not leaving your Bitcoin on an exchange like Coinbase or Kraken or Gemini or really any exchange, not your keys, not your Bitcoin. It's very important to hold Bitcoin into cold storage so you don't suffer the fate of an equivalent of the Executive Order 6102, where, for example, the U.S. government just takes all the Bitcoin that is sitting on Coinbase. This obviously, for constitutional and private property reasons, cannot happen during peaceful times, but in a state of emergency, really anything can happen, as we saw over the last few years when all of our civil rights were overthrown for an obvious reason. Then we have the issue of the U.S. national debt, which is approaching $32 trillion. This is all the outstanding treasuries, T-bills, etc. This is, as I said, about $32 trillion of toxic garbage. The problem with this stuff is it yields less than the rate of inflation. Now, someone has to hold these pieces of paper or the Fed will be forced to print money and buy them all up, thus further destroying the U.S. dollar. And this is one reason among many that there are all these mandates for regulated institutions to hold a lot of treasuries. And the regulators like to stuff these institutions to the gills with treasuries because it's a natural, or it's essentially a forced buyer. And so you have these mandates for banks, insurance companies, 401k plans, etc., to hold U.S. treasuries. They say it's for your safety, of course, and the safety of your investors' capital. Of course, Silicon Valley Bank had a huge chunk of capital in these same treasuries, and that was one of the reasons they blew up after the Fed raised rates so quickly over a year. So this is perhaps the darker reason why they want all of these institutions to hold some of this toxic debt. And it always reminds me of the U.S. government war bonds during World War I and World War II that I've read about. And there was a similar, they did more of the nationalist patriotic pitch at that point. If you don't buy our war bonds, you're basically playing on the German or Japanese team. Give us your money and also let us send your sons to die in the trenches of Europe. This is what the ads for these war bonds look like. Make every payday bond day. And here's another one, put it into national war bonds. And this is one way that it's much easier, certainly during a state of emergency, to get people to pony up their money. But even in good times, we do have these regulatory mandates that force a lot of people to hold treasuries, and people in institutions who don't even want to hold it. When you look back on these war bonds, they really do seem like very innocent days. This is back when the U.S. government still had to go hat in hand to its people to finance wars. And it had to do it because the U.S. government was still on a gold standard at that point. And so they couldn't print the money that we were on that was backing the U.S. paper bills. And so they had to go hat in hand and actually collect money from people. By contrast, today, the U.S. government just prints up the money and uses it to finance random wars all around the globe. And this is one thing that the issuer of the global reserve currency has to do, not to justify it at all. But this is what you can do on a fiat money standard. And this is one way that the fiat system contributes to a state of perpetual war. Imagine if the U.S. government actually had to raise taxes in order to get the money to send to Iraq and Afghanistan and Libya and Egypt and Ukraine, and the list goes on and on. If the government had to actually collect the money directly from its citizens, people might wake up and notice. Instead, they just print up too many US dollars to finance these wars. And you can ask, you don't have to assume that these wars are necessarily bad. Some might be good, some might be bad, they might all be bad. But the point here is that the funding for them is done in a very backdoor manner. and it's obscured from most people. And so I think this is a problem because it ends up just contributing to inflation and destroying the purchasing power of the US dollar over time. And so people should have the right to make more conscious decision about war funding. And the problem with printing up dollars to finance wars especially hurts the working and middle classes through the ensuing inflation. And of course, it's usually the working classes who go to war anyway, while the sons and daughters of the elites, the so-called elites in Washington, D.C., they never actually go to war. Now, the U.S. government obviously wants you to hold treasuries in your retirement account and not Bitcoin. They can't, at least at this stage, as we said, seize Coinbase and close its doors and close Kraken and Gemini, etc. But what they can do is attack some of the banking on-ramps. And this is what we may have seen happen over the past week with Signature, Silvergate, and Silicon Valley Bank almost closing the exits before the money printing and the boiling of the frog happens. This is the metaphor I'm referring to, where if you can't, it's very difficult to get a frog to jump into a pot of boiling water to stick them in there. But if you put them in there and you slowly turn up the temperature, they don't notice until it's too late. And this is one way that governments function with their own people. Holders of fiat currencies like the US dollar and securities denominated in US dollars like US Treasuries are slowly being boiled alive by inflation and monetary debasement. So what the US government never does a hard default, and all the drama about the debt ceiling is really just drama because the debt ceiling will be raised when it needs to be raised. But what the US government doesn't do, they never default on their debts in terms of a hard default, which would mean missing a coupon payment, missing an interest payment, or not paying back some principal at the maturity of the bond. Instead, what the U.S. government does, and has been doing really since the invention of the Federal Reserve in 1913, they've been doing a soft default where you keep the yield on treasuries. This especially happened in the period after World War II, when the U.S. accumulated a lot of debt and had to slowly inflate it away. And so the trick is if you're the U.S. government, you keep the yield on treasuries below the rate of inflation. You have the Fed do this by purchasing bonds, and thus you lose purchasing power holding those bonds. So it's good for the government, it's good for the issuer of the debt. It's not good if you are holding treasuries, and if you're being forced to hold treasuries, unfortunately, you don't have a choice. And so this is called monetary repression, I believe is the technical term, keeping the yield on treasuries below the rate of inflation. And then when the bond matures, when the treasury matures, the principal is paid back with US dollars that are worth less. And the US government never pays off its debt. It just rolls its debt by issuing new debt to pay off the old debt. So holders of fiat currencies and government bonds are slowly being boiled alive like that frog. The question is, how long will it take for the masses to wake up to this? What sort of inflation do they need to see? And then the other question, the serious question is, will it be too late for the everyday person to buy Bitcoin by the time they finally wake up? And the general public is usually behind these things, and they panic when it's too late rather than panicking in advance. I think this always leads to that darker series of questions. When Bitcoin hits $1 million per Bitcoin, as I expect it to do before the end of this decade, will Bitcoiners be demonized for quote-unquote collapsing the currency, causing economic violence, profiting from the woes of others while boiling the oceans? None of which is true, of course. But I think there is a scenario where Bitcoiners are the natural scapegoats for an economic and monetary collapse. Now, fortunately, Bitcoin is quite mobile, and there should be a few friendly jurisdictions left. I'm going to fight as hard as I can to see that the US is one of those. But if it's not, at least Bitcoin and Bitcoiners are quite mobile. And these new jurisdictions might even end up being founded by Bitcoiners with their newfound wealth. So I would say the way to avoid this, as Corey Clipston says, it's the race to avoid the war. The more people we can get into Bitcoin now, the less we risk an all-out war on Bitcoiners when the wheels really come off and the frogs wake up and realize that they're being boiled alive. If you want to hear more about this, I'll link in the description notes below to this video that talks about Corey Clipston's idea. And I called this Flipping the US for Bitcoin, the race to avoid the war. If you found this video helpful, be sure to hit that subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.